Is now from the CME Group in Chicago. Larry, always good to see you there. Yeah, just firstly, what risk is there of a government shutdown and the debt ceiling not being raised?
Well, like right now, there's so much headline risk out there, but when you look at it all, there's so much of it, people just can't decipher it. So the end result, at least here in the U.S., is that people tend to be apathetic, bored, as opposed to being negative. It seems like somehow the market has priced in the fact that this is going to go down to the wire, but it's all going to be resolved because right now volatility in asset classes aren't suggesting any type of shutdown of the U.S. government.
Okay, so you don't see that happening, and certainly the debt ceiling as well. You don't see that there being any issue surrounding that. You think that they, at the 11th hour, will raise that?
I absolutely do. I think there's going to be continued drama down to the wire, but at the end of the day, this will get figured out. I mean, we simply just can't repeat what happened in 2011. Everybody knows it, and it's just fighting back and forth until the 11th hour.
So is the Fed overreacting then with the continued concern that we hear from Bernanke and Dudley about the fiscal situation then? So does that mean, you know, that if all of that happens, as you say, we could see tapering begin in the end of October?
Yeah, I mean, right now it seems like tapering has moved either from October or December. I mean, depending on the data, and so that's like the unconventional tapering that we're seeing from the Fed here in the U.S. is that they're watching the data very, very closely, and that includes everything, not just jobs data. So with that in mind, I think October at the very earliest, December at the very latest right now, I think it's going to happen quickly, and I think the market has already priced it in and ready for it to happen.
What did you think of the data last night, though? I mean, consumer confidence down, you know, not surprisingly, I guess, and at the same time, though, house prices continuing to rise.
Yeah, and I think, you know, with consumer confidence, that was, you know, it was expected. And with the housing, that was a nice plus. I mean, let's keep in mind that number really only talks about what happened in May, June, and July. So people know that housing has stalled just a little bit, but it was a good pump for the market. And so today, we actually only had like a 13-point range in the S&P 500, but it was dramatically volatile within that 13-point range, given the good news and the bad news and putting it all together.
Hi Larry, Mark Todd from FIG here. I love the apathetic board trade. I'm not sure which trade we go for that one, but one of the things I was thinking about in terms of the shutdown is the influence of the Tea Party on the Republicans at the moment. And, you know, I don't know the numbers in terms of the mix of the Republican Party now since the recent elections, but I wondered whether there's an element within that party that said we want to have a shutdown to see how it plays out in the broader economy because the sequester worked in their mind quite well.
Well, I think you're spot on. There definitely are corners of our politics here in the U.S. that would love to see the government shut down and see what happens. But we can't, I mean, the bottom line is we can't repeat 2011. This is not like a 1995 when the government did shut down. Things would be a lot more scary now than they were in 1995. So I just don't think that voice is loud enough for that to be a reality. At the end of the day, people realize how dire the situation is, and it will have to get figured out, even if it's the 11th hour.
I know we're talking all about the deadline at the moment, the budget showdown deadline. Next week, though, is hugely busy, though, isn't it? Alongside that issue, of course, that event risk. What else are you watching?
Well, I'm starting, you know, always watching the PMI numbers, and we're going to start to see those on the 30th of the month. I mean, to me, that's really important to see if we are, in fact, making baby steps in the right direction. I mean, I tend to be very, very bullish on the outlook of both Europe and the U.S. I don't think it's going to be linear one way up, but it'd be really nice to see if these numbers continue to get a little bit better. So PMI, to me, is key numbers starting to come out on the 30th.
Just finally, too, I guess when you're talking about how you're trading, how you're dealing with this environment at the moment, I just wanted how you're looking at gold and what's your sort of sense of where it's going, trading around at 13.24 US an ounce mark.
Yeah, so right now gold, as we all know, is trapped in a really broad and volatile trading range between 12.75 and 13.75 U.S. an ounce. And right now, basically unchanged today at 13 1/4, something around there. I mean, I think that you have to have it in your portfolio. If you haven't have it now, good time to buy it, because let's face it, we're in the midst of a policy experiment around the world that's never been tried before. And who's to say that how this is all going to end up? I mean, could gold go down to $1,000 an ounce? Sure, it surely could, but that would mean that the rest of your portfolio would probably be doing pretty well. So I think it's a good time right here at 13 1/4 to buy gold. There's a significant support around 1270, 1275 U.S. an ounce.
All right, Larry, always great to get your thoughts. Thank you so much. Larry Shover there from SFG Alternatives. Stay with us. Coming up on First Business, we'll bring you across the full year profit numbers from Fonterra just dropping, and we'll get some more insights too from our guest host, Mark Todd from FIG.